Hey everybody, this is David Skrika. So this is our stock chart of the day for Tuesday, I think September 5th today. Yes, it is. So today our stock chart of the day is going to be Disney, which on Friday hits not only a new 52-week low, but multi-year lows. We're going to look at this year. You can see the 3-year chart or just broke the late 2022 low. The guy says there's that old saying, you go woke, you go broke. And Disney has been now known for like kind of catering to that kind of woke culture, which, I don't know what your feelings on it. I always hate to get political, but I am not a politically correct person. So that's, if there's one thing that I will rant and rave against, is that woke culture. So we're going to go back and look at Disney over an 11-year period. You can see we're just touching the lows of 2020. So essentially, and those were just below the lows of 2016. So essentially, we're now at the lowest level in Disney in nearly 9 years. So, it's supposedly the theme park hasn't done that well. They had this battle with Rick DeSantis because he won't enforce, like things with LGBTQ and transgender and the whatnot. And, obviously, I think a lot of times it just comes down to quality of the shows. Like, I was a huge Star Wars fan as a kid. Empire Strikes Back was like probably my favorite movie growing up. And, they've kind of ruined that whole Star Wars series. Those new movies are terrible. I guess some of those series, I did see some of the Mandalorian and some of the others. They're like, okay. They're like watchable. But like, compared to what, the first 2 Star Wars movies were, and granted, it was always already going downhill with what Lucas was doing when he made the prequels. I hate to get too much into Star Wars, but what I'm trying to say is I signed up for Disney Plus for a while to watch those things. And you know what? It just didn't impress me. Like, they got the Star Wars movies on there, but I purchased those on YouTube. So it's like, there was really no reason, watching those things didn't really impress me. I do have an ESPN Plus subscription, because I can stream certain sports on there. I'm a big soccer fan, and they show some of the soccer leagues, and that for whatever reason, even though the NBC has the rights to Premier League, the FA Cup, which is like the cup in UK, is on ESPN. So they're doing different things now. Like, for example, we talked about this when it happened, is that it hasn't really helped this stock either, but ESPN did a deal with Penn where they're going to join together help promote sports gambling. ESPN's going to have a sports gambling arm because, sports gambling is a huge business. And obviously Penn is different, is going to get into that. So, anyhow, Penn is going to get into that sort of thing, ESP, like sports gambling with ESPN. They did it with Barstool. I don't think Barstool was a big enough brand to promote it, but anyway, it went up and right back down. Because again, ESPN's losing viewership, losing viewers, losing all that, having lower ratings. So is it really going to work? Who knows, right? I think the more likely Penn will get licenses now, because I think Barstool, again, is kind of a politically incorrect company, which is kind of one reason I kind of like it. But it's difficult when you have to go in front of a gaming board and you're kind of known for being politically incorrect and you're going through in front of, a bunch of bureaucrats. But again, we can see that Disney, after this huge move from about 2009 to 2021, moved lower, and they did some shrewd moves for a while. That when they took over Marvel, and then there was that big boon in comic book movies. But and again, there's another thing. Those comic book movies, and dude, I grew up with comic books. My dad, like when he was he was one of those kids back in the 60s. He had Spider-Man, I guess it was Amazing Fantasy number 15, which was the first Spider-Man number 1, Fantastic Four, all of that stuff. And he actually ended up selling them for a lot of money, I think in the late 90s or early 2000s, right? So, and actually some of that money that he sold them for, he gave to me and invested well, and then was able to move to the Bahamas. So comic book money kind of built my house, So, so basically that's it, right? So, but and so again, those movies stink, and people I think are sick of kind of this woke culture being shoved down their throat. So, you're seeing Disney really, really struggling right now. They don't even have a low PDE because they're not making any money. So I think, you saw, like I said, that ESPN Barstool thing, a stock that we own in my service. I also own call options on it is FUBO. We've done pretty well on it. I think we're in FUBO around $1.80, $1.90. FUBO is at 265 at the moment. Yeah, I bought kind of after this big move up here in FUBO, and it's a streaming service, and Disney owns a company that has a large interest in FUBO. So I could see this as a potential takeover play, because again, FUBO does a lot of live streaming of sports, be a way for Disney to get more into that. And FUBO has NFL Red Zone, and it has Premier League, and Disney, ABC or Disney does not have the rights to those. So again, that, or ESPN does not have the rights to those. So maybe this is a way for Disney to, you know, get that in there, and then they can compete with Sling and Direct TV and YouTube TV and all these like live streaming services, you know. And FUBO already has, you know, over 1 million customers to be a way of doing it. And FUBO is a very cheap company. It only trades at just over $700 million market cap with nearly 1.3 billion in sales, you know, and they're cutting their loss. So I don't know if that would ever be the case. But I would say with the FUBO's growth rate, and if they can cut that loss to a profit by the end of 2024, like they think they can, Disney will probably have to pay, I would say, minimum 3 to 4 times revenues for FUBO, right? So so that means that would be close to $10 a share. So anyhow, that's just an idea. But and again, so with that merger of Penn and ESPN or joint venture, I should say, you know, that I could really do it. But anyhow, at some point, Disney will become a good buy. You can see back in the 2000s, you know, the stock went from, you know, over $30 during the dot-com bubble down to $5. Now, it's not quite there. You know, that's nearly 80% decline. This time, it's only down about 60% from the highs. But yeah, I would think that if Disney gets down to the 40 to 50 level, it will really be worth looking at that point. You know, if you would have bought at 5, you had another chance to buy it down there during the financial crisis. Yeah, you would have made it at one point nearly 40 times on your money. So anyhow, our stock chart of the day is Disney. And, you know, if we want to quickly look at their financials, you can see the total revenue here. You know, and look, they're still growing the revenues, right? Although it's like kind of stagnant this year, 82 to 84 billion. It's only like, you know, a couple percent growth. But again, the problem kind of remains the bottom line, where they're not really growing profits at all. So you know, and then also like a lot of companies, you know, they've took on quite a bit of debt, et cetera, et cetera. So they're really struggling right now. And like I said, I don't want to get too negative. I want to get like whatever my political views on wokeness are. I don't want to like let that influence me too much. But I just don't think it's quite cheap enough yet. And they probably see. And again, one thing I know about buying these cheaper companies, they're just starting that initial stages of whatever, the restructuring, the turnaround. And for a company this size, you know, it's kind of that old saying, like, it's like trying to like turn around the Titanic, you know, it's very, very difficult. Like, you know, when you look at some of these, like FUBO is a small cap company, it's much easier to turn around, you know, whatever, a $500 million market cap company than it is, you know, $100 billion one. So by the way, that's another aspect. If they were to ever look at FUBO, you know, FUBO again only trades at about $700 to $800 million market cap. And Disney, I think, is 160 billion. So really, that's a drop in the bucket for them to pay a couple billion, you know, for FUBO. So anyhow, I just wanted to show you that. You know, it looks to me like, and I said, it hasn't quite broken, but I'd say if you break 80, that's a significant breakdown. That breaks the 2016, 2020 lows. And then really, you look at this huge move that happened here from about, you know, mid 20s to over $100. There's really nothing until about like major support, that $40 that I mentioned, maybe a place to look at buying it, right? So again, and look, it looks kind of similar again to that top in the late 90s, early 2000s when boom, it broke it here, you know, eventually went to 5, and that was when it broke 20. So now I'm not saying if it breaks 80 because 75% would mean it goes to 20, but I would definitely think that this topping pattern is very similar to this huge topping pattern here. You know, multi-year topping pattern. There was a very set resistance level. So or sorry, support level. Anyhow, I hope you enjoyed the stock chart of the day. I think tomorrow I'm going to get back to a macro chart. I think I'm actually, or I think I might look at the Canadian banks tomorrow because they're interesting too, because they're kind of all near 52-week lows. And I think that's a warning sign of where the Canadian housing market's going. So I hope you enjoyed this, and everybody take care.